Hey everyone, welcome back to SecureDApp's YouTube channel. I'm Kunal Chowdhury, your host and host as always. So we are back with SecureDApp Spotlight second episode. So what is SecureDApp Spotlight? So SecureDApp Spotlight is a series where we sit down with industry experts to explore the latest blockchain and cybersecurity regulations and everything that comes in between. Real talk, real insight straight from the front lines of Web3 and digital security. So, without wasting time, let me just introduce a bit about myself. I'm Kunal Chowdhury, a content and community executive and a subject matter expert at SecureDApp. With me, we have Nikhil Prasad, a famous and a very well known legal person from SecureDApp. So let me tell something about Nikhil Prasad. Nikhil Prasad is one of the most promising legal minds shaping the future of blockchain regulations. And at SecureDApp, Nikhil serves as a blockchain regulation and a subject matter expert, playing a critical role in aligning decentralized technologies with evolving legal frameworks. So, without wasting any further delays, let me hand over the mic to Mr. Nikhil Prasad. So, Nikhil, over to you, my friend. Please introduce a bit about yourself and tell the audience what we are heading to next.
Thank you, Kunal. So, hello everybody. Myself, Nikhil Prasad Singh, and I am a passionate uh, lawyer in the field of virtual digital assets and cryptos and Web3 regulations. And uh, today we are heading towards what are the legal regulations in the field of cryptos and Web3 in the European Union. So today we'll cover all the regulations, all the aspects, all the legality and loopholes that are in the European Union related to the virtual digital assets. So over to you, my friend.
Thank you, Nikhil. Thank you for the intro, my friend. So let's start the things off with a question that comes to my mind. Where does EU stands on the virtual digital assets and blockchain today?
Hmm. So, so it's a very good question to start, Kunal. So first of all, as of mid 2025, the EU has emerged as one of the what I can say the first major jurisdiction. When I say major jurisdiction, it means that European Union is almost consisting of around 30 countries or more. So it is what European Union consists of, and it's the first major jurisdiction to implement a comprehensive framework of crypto asset, and it is named as Markets in Crypto Asset Regulations. So in abbreviation, we can call it as MiCA. So we will call it MiCA from now on in the whole what I can say whole podcast. So the
Yes.
MiCA has been in functioning from I think around December 2024, and around that every country has applied in some way or another through their own regulatory methods into that country, into their own country. So that is how US stands in the uh, blockchain and virtual digital assets today. Furthermore, when we talk about what I can say is innovations and what blockchain innovations are coming in that particular mm, area. So we can state that there are many sandboxes that are functioning in the major countries. There are many projects, pilot projects that are being undertaken by government with engagement with the private players. So there are a lot more. There is many things that are going on in European Union right now after the implementation of MiCA. You will have to do many compliances and checks after the implementation of MiCA. So that is what it is. It has come to now, and from the blockchain perspective, because the virtual digital asset that we are talking about is based on the blockchain technology. From that perspective, I think EU has released their digital finance package that was adopted way back in 2020, if I remember correctly, that encourage pilot projects in tokenization of real world assets and central bank digital currencies that are CBDCs. digital euro. The European Central Bank is currently conducting a what I can say CBDC proof of concept in the major member state, focusing on the offline payments, programmability, and all that. And meanwhile, other member states continue to support those regulatory sandbox that we are talking about. So it is what we are standing on right now.
Okay, okay, Nikhil. Nice hearing from you. That was quite informative. So my next question is, how does MiCA define crypto assets, and how does that differ from the traditional financial instruments that we all know?
Mm. So Kunal, when we talk about what is the definition of crypto assets, so we have to be very particular in the case of legal mindset, because all there is in legal things are all everything is words and language. A single language means a thousand things. So when we talk particularly about crypto assets, so under the MiCA regulation, a crypto asset is any digital representation of value or rights which may be transferred and stored electronically using the DLT technology or any similar technology. And MiCA, when we talk about MiCA, so it breaks the uh, what I can say, it breaks the crypto assets in majorly three different categories. First is the e-money tokens. It means stable coins. Okay, stable coins are tokens or cryptos which are backed by fiat currencies like USDT, USDC, and all that. Further, there are what tokens that aim to stabilize themselves. मतलब कि not they are not stable coins, but they have some value attached to it. They have something real project going on, or all that. Those are called asset reference tokens. Okay, there can be some other regulations as well, some other definition as well. There, as far as I understand, there is asset reference token, and there are then other crypto assets such as utility tokens, NFTs, and DAO and all that. So this is what uh, it is right now. And in contrast to the traditional financial instrument like MFID, the prospectus of regulations are defined to include transferable securities as well. So money market. So suppose that um, securities is something that is defined as like which is backed by bonds, debentures, uh, debt mechanism, and there are many more things that are included in securities. Okay, so they have so crypto assets also come under the securities aspects as well. But they have equated crypto assets with the level of equal to the securities. So that is what they are doing right now, and there are many countries who doesn't equate their tokens with securities, but EU has done that, and that is what definition of crypto assets is in the MiCA right now.
Okay, Nikhil. Got your point, brother. So coming on to the next question that I have in my mind, how do MiCA authorization and passporting mechanism work for crypto services or providers that we called as CASPs?
So as crypto asset service provider, we also call them virtual asset service provider as well. But in the MiCA, they are called crypto asset service providers. There. And under the MiCA, any legal entity, when I say legal entity, it means any corporate or any partnership kind of thing or company and all that intends to provide one or more of the crypto asset services. So they have to, they have to get their registration with the MiCA. Uh, and furthermore, matlab, if they are providing what I can say, uh, services like custody of the tokens, exchange, operations of trading platforms, or any advice on the crypto asset services. So they'll have to get an authorization from that EU member state under the MiCA regulation. So this is how they function. I mean, there is MiCA that is applied in the of the European Union, whole of the European Union, and every country in either way through their what I can say, um, through their own authority or their own mechanism have to apply that in their own country. Okay, so this is how they function. Like in Germany, there is BaFin that controls the all the authorization under the MiCA. So Germans have authorized BaFin as a authority in their country under the MiCA regulations. So that is how they are functioning. So in so if they are providing custody, exchange, any transfer, storage facilities, or uh, and more other types of services in the sector of virtual digital assets, so they will have to include, so they will have to get a license from the MiCA, from the under the MiCA. That what I'm trying to say. They will have to show local presence and management. They'll have to maintain some minimum capital, and there are many consumer safeguards as well. They will have to define how their structuring is. They'll have to uh, what be compliant with the all the anti-money laundering and the counter-terror financing laws. So that is how they'll have to be compliant in the European Union right now after MiCA.
Okay, Nikhil. So following up to this question, I have one more question in my mind regarding this. So what's consumer protection and disclosure obligation does MiCA impose on token issuers and caps particularly?
What consumer protection? So that is a uh, very important question. I think that is right now in the this particular domain. What consumer protection does the government is providing?
Yes,
Because
yes, actually.
there is a lot of adoption of the uh, there is a lot of adoption in the crypto world, in the local peoples, but there is no consumer protection that is right now in many countries. So but in contrast to MiCA, they have tried to, what I can say, they have tried to give some consumer protection in the to their consumers. Such a there are like the issuer will have, if somebody is issuing stable coins or any type of tokens, or they are registered as a CSP, they'll have to provide their all the name, legal form, where the registered office is there, how they are structured, their management structure. They'll have to define their roles. They'll have to maintain a principal officer, which is maintaining all the data, providing just like India FIU. They'll have to provide a detailed description of their tokens, matlab, how their token is functioning. It is a value token or it is a stable token, what type of function that token is giving, how tokens can be redeemed. There are technical, financial, legal risk as well. But but EU has, I can say, EU has tried to be consumer centric as much as possible. I mean, you cannot even what you cannot even advertise your cryptos or tokens without getting permission from the authorities, and that and under that definition the influencers come as well. Okay, so if any influencer is trying to what advertise any particular crypto tokens or virtual digital assets, they can be penalized if there is no if there is no permission from the authorities. And that is much how they have gone far in implementing this consumer centric law that I can see right now. So.
Okay, Nikhil. Just one more question regarding the stable coins that you mentioned two times in the previous
Mm.
ones. How are stable coins regulated under MiCA, and what are the requirements for the issuers of assets reference and e-money tokens that we call?
Hmm. So how that is a very good question. How stable coins are regulated under the MiCA? So
Yes,
yeah, because there is a lot more compliance that has to be done when someone is issuing a stable coin, right?
exactly.
Because yeah, because it is backed by fiat currencies. So how anybody will redeem it? There will be lot more government entities involved. There will be a bank transactions happening. So there is a lot more things that will have to be done in while regulating the stable coin. That is a very good question, my friend. So first of all, stable coins are a crypto asset that we already know. It is under the definition. But how are they regulated? Are there any difference? So first of all, what I can say, any token that is what attached with any asset, that is fiat currencies, commodities, other crypto assets, and they have a design. They're designed in such a way that they'll have to maintain a stable value within their themselves. So they are called. They are under the stablecoin. Further, any money token that is backed by fiat currencies also come under the uh, stable coins definitions as well. So when we talk about stable coin, how are they regulated? First of all, any asset reference token has to be authorized from the EU member state, that particular member state. Second, they'll have to reserve their asset. They'll have to reserve their asset particularly or equal to the token value in liquid form or in the government bonds or they'll have to maintain that reserve. Suppose that it is a commodity backed token. It will be also come under the stable coin valuation as well. But they'll have to maintain somewhere the reserves on how they're trying to maintain the value. And if somebody wants to redeem it, how will they give that particular value in that exchange? So there are many types of compliances that has come for the stable coins. There are potential safeguards like a capital buffer equal to 2% will have to be always maintained by the issuer. They will have to must appoint a board with financial expertise that will implement AML laws and publish proof of reserves by an independent auditor. It means that they'll have to produce proof of reserves every quarter by an independent auditor. That much. So it is pretty much equal to any commodity market regulation. Okay. So they'll have to maintain their reserves. They'll have to show their reserves audited quarterly. They'll have to maintain a minimum value. They'll have to show how they'll redeem that particular value for the customers. So these are all the things that will have to be maintained while.
Got your point, Nikhil. Got your point. So Nikhil, you just mentioned one point, that AML thing. So I know personally what AML is, but from your side, I have a question. So how does EU's AML or CTF framework interact with MiCA for DeFi, that we call decentralized finance, and DEX, that we call decentralized exchanges? So if you can just start with the full form of AML so that our viewers can just get the knowledge about it.
Okay, Kunal. So AML is something that is anti-money laundering. So I mean, crypto has always been seen with that eye that it is a uh, technology to launder your money. So that is why every country try to implement their anti-money laundering laws, in particular to the uh, crypto assets. Even the country which don't have regulations like India, they also try to maintain uh, that particular AML laws, PMLA in the regulate the under the well, they try to maintain the regulate the crypto assets under the AML laws. That's what I was trying to state. So AML is nothing but anti-money laundering laws, and CTF is nothing but counter-terror financing. Okay, so these are all definitions that come from FATF, that is Financial Action Task Force. So these are all definitions from that particular perspective.
Actually,
So when we talk,
I just said to tell you the full form, as because for our new viewers, for students, so that they can understand everything that we are talking about, right? because we are making this simple for the viewers, so that they can understand the regulations and blockchain thing and all other thing. So that is the reason I just mentioned you to tell everything in
No,
just
no, no, no. I think we
uh,
should be as elaborative as possible when
yes,
we are trying
exactly,
to,
exactly.
yeah, deal with the audience perspective. So coming back to your question, that how does the EU framework on MiCA and AML laws has been functioning? So MiCA explicitly focuses on centralized entities providing crypto asset services. Okay, so the AML directives that are targeting the exchange providers of the exchange of crypto assets of fiat or wallet providers, whether they are centralized or decentralized, it doesn't matter. The European banking authorities has clarified that all the anti-money laundering directives, any entity enabling the exchange of crypto assets, even via decentralization, must register as a virtual asset service provider if it controls the private keys or provide direct access to the non on-chain trading. So what I'm trying to say is that uh, if that particular service provider is maintaining their controlling the private keys, is maintaining the direct access to their on-chain trading, is maintaining uh, what providing custodian services, is properly involved deeply in those services. So whether they are decentralized, centralized, or decentralized, it doesn't matter. They'll have to get registered as first of all as a VASP, virtual asset service provider. Further, all the KYC and AML laws applies on decentralized exchanges as well. So they'll have to do KYC of their own customers. They'll have to maintain all the anti-money laundering laws. If suppose that if a tax operator offer custodial wallet or fiat on-off ramps anywhere in the EU, they must implement directives for users above euro 1,000 euros for higher risk. So if somebody is submitting rupee more than 1,000 euros, they will come under the high risk wallet issuers. So these are purely non-custodial DEX models, non-custodial DEX models, where users connect their own wallet and trades occur entirely on chain, are not directly captured. But regulators are exploring how to impose AML on aggregator interfaces that provide any intermediary functions as well. So what I was trying to say, if you're providing a custody service, exchange service, or you are directly included in those services, so you'll have to apply all the KYC and AML laws. But if you are trying to tell yourself that I am a decentralized platform, so first of all, you will have to uh, tell us that what is a decentralized platform. Okay, so decentralized in this perspective means that they have lots of nodes connected with them. All those nodes are in that particular trading system. So that is what decentralized means. And so they will also have to get registered with the CSP. But if they are only providing aggregator services, okay, so matlab they are only providing user interface, and all that on-chain happening is done behind their platform, or they are connected with other platform to run that particular thing. So they will not have to get registered with the uh, virtual asset service provider list. So if you are an aggregator, which is only providing on face or user interface mechanism just for onboarding clients, just for onboarding customer, you will not have to generate or get connected with this licensing mechanism. But or there is other way as well, that what you can do is, if you are suppose that you are a decentralized exchange, you're stating yourself we are a decentralized mechanism. So there will be something that will be connected with you, like people who are providing what transactions, people who are providing liquidity, people who are giving you storage services. So you are connected with all those people. So those people will have to get licenses, and you can just become their aggregator. Okay. So in that way, you can tell yourself that you are a decentralized person. So that is what is the status of decentralized exchanges right now.
What's your point, Nikhil? Rightly said. I understood I completely understood what you want to say about that decentralized and that part. Nikhil, I have one more question regarding GDPR. I know you have heard about it. So, how does GDPR impact blockchain and VDA related services in the European Union, particularly?
Mm. A very good question, Kunal. मतलब GDPR, so it's a uh, uh, first of all, what is a GDPR? It's General Data Protection Regulations. So in India, we have DPDP, that is Data Protection and Data Privacy Act for maintaining the privacy and cyber security. And in the European Union, we have GDPR, General Data Privacy Rules. Indian law is all copy of GDPR. DPDP is the copy of GDPR. Is that what we can say? So GDPR comes first. So under the GDPR, there is lot. It is, I can say, it is very much consumer centric. So um, suppose that you will have to maintain marriage. You will have to get consent with the customer. You'll have to maintain a consent manager. You'll have to maintain all that data. And if the consent manager, if the person giving the consent state that I don't want to give the consent, right, I want to revoke my consent right now, or the purpose of my data has been achieved. So the consent manager will have to delete that data. The processor will have to delete the data. Data controllers will have to delete the data. So that is what GDPR. Uh, that is how GDPR is consumer centric. So GDPR grants data subjects a right to be forgotten as well, which conflicts with the blockchain immutability. But since public blockchains store data across nodes, deleting a user personal data from all nodes is impracticable. So it is something that has to be seen right now, how immutability uh, immutability of the blockchain what hampers the data privacy. Further CASP, what government in MiCA has done, even the EU regulation in MiCA has done that any crypto asset service provider should store all KYC ML documents, IP addresses, and email addresses of chain in a secure database subject to encryption and retention limits. Okay. Further, when interacting with on-chain services, CASP may store only cryptographic hashes or of personal data, which are irreversible. So that is, these are some things that is very opposite. GDPR is, I think, completely opposite of what everything is blockchain all about. Blockchain is about immutability. It's about transparency. You cannot delete anything. You will have control over all your data, but you cannot delete anything. So privacy is one thing that is not in the blockchain. But GDPR has so they are trying to find a midway in this, which in this irreversible process. Let's see what happens in the future.
Exactly, exactly. Nikhil, coming from India, and let us talk about the taxes that we have in European Union. Are there any virtual digital asset subject taxes subject to like value added tax in European Union?
Value added tax. Okay. So what I can, as far as I can state you, is that the VAT is something in the crypto asset EU has been already clarified by the European Court of Justice, ECJ, in the 2021 as well. That ECJ held that the exchange of one crypto assets for another constitutes a supply service that is exempted from the VAT because crypto asset function like means of payment. Okay, so they are only supplying that. They are not generating any value. Crypto exchanges are not generating any value. So VAT does not apply on the uh, crypto exchanges. I mean, where these taxes will apply? If you are buying crypto tokens from an exchange, is that correct?
Yes,
So,
yes, yes.
but they are only providing a supply service, so they cannot tax you on VAT.
Okay.
Hmm.
Okay, that was nice to hear. So Nikhil, we are on to our 10th question. This question, I got it from my community. I posted that we are going for the second episode of SecureDApp Spotlight regarding the European Union VDA regulations. So I got a question that was, I think, very important. So what do virtual digital assets qualify? When do virtual digital assets qualify as financial instruments under MFID 2, and what are the implications of it?
Hmm. So first of all, we have to understand, elaborate what is MIFID for our viewers, I think. So MIFID means Markets and Financial Instrument Directives. So European Union. So they I mean, so similar to India's notifications, rules, regulations, they have their own directives. European unions have their own directive related to markets and financial instruments. So like the securities market, investment intermediaries, and all that. So those all come under the financial instruments. So under the MiCA, what is the status of the financial instruments? Okay. Or what you're asking was key virtual digital, how virtual digital asset provide uh, qualifies as financial element, right? Okay.
Yes.
So under the MIFID, financial instrument includes transferable securities, money market instruments, units and collective investment undertakings, and certain direct derivatives that are furthermore derivatives. A crypto assets, I mean, a crypto asset will only qualify as a financial instrument when it confers a right equivalent to a shares or a bond. Okay, first of all, for example, mm, a token, a token that represents an equity stake in a company, or a bond like token paying periodic coupon qualities as a transferable securities. So those things will be included in the financial instruments as a crypto assets. Further, if the crypto token has a derivative character, what is a derivative character? First, we should understand that if the token value is derived from the performance of any underlying instrument, like a stock index, bonds, and all that. So they will fall under the derivative character. So if these kind of uh, definitions are attached with that particular crypto or token, so then they will fall in the financial instrument. Okay, so they will have to what implication uh, they'll face when suppose that when the token qualifies as a financial instrument, and the offer of the public exceed the 8 million pound, European euros, the issuer must publish a prospectus approved by the relevant national competent authority. Okay, so there is a prospectus requirement. There is a license. There has to be a licensing of the trading platforms which are providing those financial instrument services for those crypto assets. There are investor protection rules as well that will be applied on those. So that is how uh, MIFID functions on the crypto assets. That is how financial instruments are attached with the crypto assets, I think.
Okay, Nikhil, got your point, bro. So, we will be heading to our last question, Nikhil. But before that, I would like to tell something about our product, Solidity Shield of SecureDApp. So, what is Solidity Shield? Solidity Shield is powered by SecureDApp's cutting-edge AI tech. Is a designed to augment security and reliability to Ethereum-based smart contracts. It uses algorithms to detect over 150 plus vulnerabilities, so you know what we do. So before going to our next question, Nikhil, let's talk about the payment services that we have.
Mm,
In How do payment services directive 2 that we call PSD2 and EBA guidelines affect the banking access for virtual digital exchanges in Europe?
mm. So thank you, Kunal, for this question. So for all the viewers, Payment Services Directive are for the payment aggregator platforms. So in the same way, there are instrument directive, financial instrument directive, that was MFID. In the same way, there are payment services directives from the EU as well. So there is PSD1, PSD2, PSD3. So that is how they maintain the evolution. So while PSD2 primarily covers payment services, its implication into how banks interface with the crypto exchanges is still uh, debatable, because earlier in PSD2 there were many mm, what I can say exemptions that was given to the banks. But after the PSD3, which has just came right now, which will apply from 2026, we are still functioning on PSD2, but after PSD3 will apply on 2026. So under the PSD3, so it has more stricter regulations. It has more stricter derivatives as related as compared to PSD2, and those uh, have implications on banking access in a huge manner. Like banks must monitor for unusual transaction within their framework. For instance, any single transfer above 10,000 euros tagged as a which is for a crypto purchase or any crypto token purchase, will have to be maintained in the internal funds report to the bank's compliance department, who must then decide whether to further it has to let that particular transfer keep it happening or not. So many bank crypto partnerships now leverage blockchain analytics firms like to screen wallet addresses before allowing a payment to proceed, such that. So there are a lot more stricter regulations that are coming, and I think mm, SecureDApp will provide more security, just like your name, will provide more security to those consumers. So, because MiCA is all about consumer protection, man. What I can say. I mean, they are protecting consumers from influencers. They are protecting consumers from all those marketers. They're protecting consumers from all those issuers, crypto asset wallet providers. So in a you will see a lot more consumer-centric regulation related to virtual digital assets in the European Union as well. मतलब, the further updates that will amendment that will come in the MiCA. So you'll see a lot more mm, consumer-centric. So that is where SecureDApp's should I think should also function in maintaining the protection of the consumers.
Exactly, Nikhil. We are working day and night to just protect India and stay at the frontline defense for India for blockchain and cybersecurity. So, Nikhil, this was the last question that we have from you. But before going, I would just like to hear some final words and any thoughts for our viewers. You can just express.
Okay, so the only one thing that I can express is invest in a good crypto. First of all, understand what crypto is, for all understand all type of how many type of coins are there, what crypto regulations are functioning, how AML safety, what consumer protection laws are there, how what anti-money laundering laws are there, and then invest in those cryptos. Don't just think that it is a money making machine. No, it is not a money making machine, man. There are technology behind it. There is some work that is happening behind it that creates value for the consumers. And read white paper. So be as informative as you can. Read. Be as informative as you can, and only then invest your hard-earned money in this field. A lot more regulations are coming. A lot more consumer-centric regulations are coming, and please invest only in those areas where there are consumer-centric regulations. In those jurisdictions where there are consumer-centric regulations. Okay, because there is some level of scam that is happening in this crypto world. So that is what I can say for the audience. And And it is where SecureDApp also comes in. It will protect your it will protect your devices from any attacks, any cyber attacks. It will maintain your smart contracts audits. It will help you in securing your blockchain and cryptos uh, in more disciplined manner. So over to you, man.
Exactly, Nikhil, exactly. Uh, this was the very nice and fine point from you at the end of the session that we should not just go for crypto like it is a money-making machine or something like that. Invest in crypto, but invest for technology, right? You mean to say. So, Nikhil, we have come to the end of this sessions right now. So, thank you everyone who have joined here, and thank you for being such an amazing audience. So taking a leave for now, we will be coming back for the third episode of SecureDApp Spotlight, definitely. Till then, stay safe, stay secure, and stay ahead. Subscribe to our YouTube channel, SecureDApp. Like this video if you did so. Share this video with your friends and families. This is Kunal Chaudhary signing off. Thank you, Nikhil. Thank you, man.
Thank you. Thank you.